Well, that was really interesting what Rightmove said today, showing that there is still this demand for houses. Certainly people are viewing it, whether it's just because they're in lockdown and they've got nothing else to do, want to browse the property market. But certainly it does seem as though that there is continuing demand, because there was this fear that there would be a tailing off. Because, of course, those people viewing now on Rightmove won't be able to benefit from the stamp duty relief that currently exists, because that's due to come to the end in March. Now, we had some results from Barratt Developments out yesterday, and they showed that there was a 9% increase in completions. Really good set of results from Barratt Developments, showing that they're really cementing the recovery from a pretty low point in 2020 when the construction sites were mothballed. And it certainly does seem to indicate that there is still pent-up demand for housing. And remember, of course, there is a real housing shortage in the UK as well. Now, add to the fact that we expect interest rates to stay low, may not turn negative, but certainly stay low for a significant amount of time. And given that there is this pent-up demand, it certainly seems as though that fear that the mini housing boom would completely fizzle out, and we will see, in fact, quite a dramatic fall in prices. That looks less likely that it will come to pass. And actually, given the low price of many of the house builders and these results that we've had out from Barratt indicating slightly more demand and expectation that demand will continue, I think the prospect for the house builders does look pretty good.
Susannah, there's a Jonathan Franzen novel over your left shoulder. It's not The Corrections, is it?
It certainly is The Corrections.
It is The Corrections.
It's a good novel,
brilliant.
isn't it?
Well, what a great line into my next question, because I'm going to ask you, is the market due another big correction?
Well, it's interesting. Let's look at those tech results that we had out this week, showing, for example, that Amazon really is still the king of e-commerce. Now, its share price has gone up in leaps and bounds, as well as the other tech giants as well. And we can see that that has added to fears that the market has become overheated. Now, the thing is, we have seen this big shift towards digital during the pandemic, and that looks no sign as though it's going to be reversed anytime soon. However, we are unlikely to see a continuation of the growth, the likes of Amazon, in future quarters, I don't expect. What I think the main pressure will be down the line is whether there is going to be greater regulation, whether that comes in the form of new legislation by the new US administration, or whether they simply show more teeth, the regulators, in terms of employing existing legislation. And I think if the tech giants are cut down to size, and given the huge profits that they keep unveiling, I think there is continued appetite for that, and appetite among politicians to make sure that they pay a lot more tax. So I do think that that could happen. And then, of course, you have the huge valuations of the likes of Tesla, for example. And I do think that if there is a pop, it could certainly come in the tech sector, and that then, of course, will have a ripple effect down through the indices.